I'm Jessica Minton for IB Times TV, and today I'm joined by Scott Carter, who's the CEO of Lear Capital, and he's going to talk to us about where he thinks the next level of support is for gold. Now, Scott, thank you so much for joining me today.
Pleasure to be here. Thanks for having me.
Great, absolutely. Well, obviously there's a lot going on in the markets. We did see gold slide on Friday after that better than expected October jobs report, which was surprising because that was when the shutdown was going on. With all of this going on, with speculation whenever we do get good data in the marketplace, and then there's that fear that the Fed may begin to scale back on QE, how exactly does that end up affecting gold as well as its relationship with the dollar?
Well, I think you're making a good point. All eyes are on the Fed right now, and this idea of tapering or not tapering. So the market's in a good news is bad news is good news type of do loop here, and the jobs report was essentially good news, like the economy's turning the corner, which would mean that the Fed would start tapering, which is ultimately bad news for the markets and bad news for gold because the dollar would strengthen. So I think we received some of that trade on Friday. There's some continuation this week, but it's still, in my view, a little soon to determine whether they're going to taper at all. My view is they're not going to taper, that the economy is weak, and long term, as this plays out in 2014, it will be bullish for gold.
Now, as we do get closer and closer to January, that is when Fed Chairman Ben Bernanke's term is going to expire, and it looks like we are going to get Janet Yellen in as the next Fed Chairman. And with that coming in January, as well as that expiration of the debt ceiling kind of drama we are going to have to deal with again with Washington, where exactly do you think the next level of support is for gold?
Well, there's a battle going on at 1300 right now, and I think that battle is because we're not sure what's going to happen with the new leadership at the Fed with Janet Yellen. We're not sure what's going to happen with the debt ceiling, and we're not sure what's going on with Europe. All of that sort of unknown, those unknown questions has created a volatile or choppy trading environment. So right now gold has been above and slightly below 1300. Once there's clarity on the Fed's position, really, is Janet Yellen going to be a dove or a hawk? Is Europe out of the woods, or are they going to keep cutting interest rates? And is our debt ceiling going to be brought into control or not? Once those pieces are put in place, then you're going to see gold either consolidate where it is or start to move up. In my view, it's a bullish scenario for gold, and we're going to see it take out 1300, 1350 and move higher.
Now, how exactly important is a strengthening dollar with regard to gold?
Well, a strengthening dollar generally means that since gold is priced in dollars, a lot of, as a world reserve currency, it takes fewer dollars as the dollar strengthens to buy gold, so the price of gold would drop, as would oil or any other hard asset. So if the dollar is strengthening because the economy is stronger or the world economy is stronger, then that's going to put some pressure on the price of gold. But if the dollar is strengthening because all other currencies are weakening, like what happened in Europe with the euro, with Draghi cutting interest rates, well, then the dollar's not really getting stronger on an absolute basis. It just looks stronger compared to other currencies.
Now, do you follow the relative strength index? And if you do, what exactly has it been telling you?
Right. I think it tells me that gold is the prettiest of the ugly currencies. You see, as I said, the euro, Mario Draghi, and the Europe cutting interest rates, which is trying to weaken the Europe. You see what they call Abenomics in Japan, which is trying to reduce the strength of the yen. China is manipulating their currency to try to keep its exports very attractive. So the dollar appears stronger compared to those currencies, but it's really not. The buying power of the dollar is actually declining like all currencies. It's a race to the bottom. That's what's going to be bullish for gold and silver, is that on an absolute basis, all fiat currencies are declining in value.
Now, when it comes to the retail exodus of gold ETFs, do you think it's accelerating, or do you think it's actually holding steady?
Well, it's a great point. Actually, today it came out that ETF gold holdings actually increased. It just was news today. So I think that you certainly see a leveling off or a steady of ETF gold. They're starting to buy, and you're starting to see some movement back into the ETF market. I will point out the physical demand for gold around the world has been strong for the last year and a half. So there's a bit of a disconnect between the price of gold from the paper markets and what's actually happening in the physical gold market. Strength in buying in the Eastern countries, Asian countries, as well as strength of small investors in physical gold has been very strong.
Well, Scott, thank you so much for taking the time to join with me.
Thank you for having me.